This is our Forex blog for August 2nd, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. This is our currency meter, which shows the real-time trend, 15-minute, hourly, daily, weekly, monthly. And it's also set up on a range-based chart, which means the more active the market, the more bars there are. And it really gives you an intuitive sense. I'm going to hit minus key here to zoom out a little bit because the market was very active today. We'll scroll back. And basically, in a nutshell, you want to, when the dollar's weak earlier today, you want to sell that versus one of the stronger ones. You can see from 4:30 all the way to 8:30 right here, extremely weak dollar on all time frames. The Swiss was very strong. However, the Swiss has, the weekly and monthly trend, which is on the bottom, is down. The euro is mostly all up. The Australian also very strong. It didn't have quite as much strength as the euro did after 7:30. So let's take a look at that one. We're looking to sell the euro versus, we're looking to buy the euro versus the dollar after 7:30. Let's scroll this chart back. Here's 7:30. You can see that the trend was up, pulled back a little bit, came up again, went sideways, and then the breakout happened, and it went from 1.2275 up 100 pips. And the currency meter showed you and told you to be focusing on that from about 7:30 right here. A strong euro, a weak dollar makes this currency explode. Now, one of the things that we offer is our volume profile charts, and I've found that not many of the traders I talk to are actually using this. This has become over the last month a critical component of my trading, and I show it in our blogs every once in a while, but I do have it a part of my trading workspace, and I'm going to make sure that people use it, and I'll show you now how I'm going to do that. This is a daily euro-dollar chart with the volume profile chart put on it. And the three lines show the upper value area, the middle, which is the point of control where the most activity happened during the day. You can see it's where the most volume, for lack of a better term, happened. Even though there's no Forex volume, we use tick data and tick volume and time to calculate this. So it is very statistically based. And this is where the most trading activity is. You could say that most positions for the day are at the point of control. The upper and lower value areas is where about 68% of the day's activity occurred. Above the upper value area and point of control, the market tends to trend up. Below the point of control, and especially the lower value area, the market tends to trend down. And you can see yesterday, the previous day's point of control was right here at around 22.92, and the market opened yesterday, and when it went above that 22.92, it went up about 30, 40 pips. But it never really broke out above the previous day's high by more than 5 pips. If you knew where that value area was, you could have traded it on the long side above 22.92 here and had the chance to make 35, 40 pips. A lot of times breakouts of the previous day's high or low do not go too far. This one, the previous day, 23.10, went up 22 pips. However, if you had the value area the previous day at 86, you have the chance to make another an extra 20 pips. 20 pips is huge. So let me showcase now what this is going to look like approximately in our software. I'll bring up a euro-dollar chart here. I'm going to zoom out a little bit. I'm going to take the pivots off here. And I'm going to add the FX value areas. I'm going to be uploading manually. It's going to take me 10-15 minutes every day to do this, but it's critical. It's critical for our business, and it's critical for us keeping customers that you have this information available to you. Let me take the pivots off here, and we're going to go to Add Script, and it's going to be on the bottom under FX value areas. And basically, what this is going to do is show you where those value areas are for the previous day. Let me scroll back out and show you this. Underneath the lower value area, obviously the trend is down and the market's more likely to go down. When it breaks back in this value area, it's more likely to go up. But notice how that acted as major area of resistance here. When it broke above there, you had this nice 22.96. Even if you got out of it right here, you made about 50 pips. And on the way down, notice how these areas, which by the way are real support and resistance areas, acted as, support. Once it broke underneath there, it acted as resistance. Later in the day, we had a big trend down. If you didn't know where these areas were, you're not going to take trades based on them, and you're not going to have profits, or at least the chance of profits that traders like myself have, because we just simply have more monitors than you do. For example, let's take a look at the pound yen volume profile chart. We're going to download tick data, and you can see why a lot of traders don't do this. We have to download tick data. It might take, depending on how fast your internet connection is, it'll slow down your workspace from loading, but you don't have to have up a daily or a weekly chart with millions of different tick prices to see where this activity is. Yesterday's point of control is at 122. The upper value area is at 122.26. The lower one is here. Now let's bring up, let's just say, a 5-minute chart of the pound yen. Oops, hold on one second here. All right. And we're going to put the FX value areas on this. And we're putting in some ways to give you the ability to highlight this with different colors. And I'm not done with that yet, but this is going to be part of our next release. But you can see the market kind of opens up and it's chopping around amongst these levels. Guess what? It couldn't go above the point of control, and like I said in the beginning, underneath the point of control the market's more likely to go down. Underneath the lower value area it's more likely to go down. You can see it fell from 88 all the way down to 51. Market came up and found resistance, right? Let's say you got short right here. The fact that it didn't come down when it broke back above this value area, you want to go long. This is your first profit target. This is your second. And it exploded up obviously due to news. But when it came back down and went back underneath this level, you want to look to go short again. Let's just showcase some of the other ones. Euro, or we'll do the dollar Swiss. In some cases, the market doesn't really move that much the previous day, and the majority of the trading activity happens in a very narrow range. And so you can see just by looking at yesterday's 5-minute chart that that's where most of the activity happened. And notice how it acts as support here. Once it breaks underneath it, the market goes down. When it goes back above there, it goes up. A lot of times you're going to have value areas much closer together than this. There's Australian dollar. Notice market starts underneath the value area, and so the trend's down. Once it goes back into the value area, it might come up to the point of control and go back down, or in this case it might go up to the point of control, go sideways and break out. Great place to go long right here, and the market exploded up. And when it came back down, it didn't find support here, so it's likely to go to the next level. And when it went underneath that level, it's likely to go down. It had a false breakout back into the value area of yesterday, but when it came back down right here, you could go short, 0486, and you can see it fell over 40 pips. Everyone's going to be different. Sometimes you're going to be close. Notice how this is chopping around in between these two levels. So when it breaks out above here, it's a very good place to go long, 36, and it went all the way up to 76. Again, 40 pips. You might not realize this, but if you just get 10 pips per day, you're going to double your account. I'm going to prove this to you right now. Here's our Trade Analyzer Planner. You're going to double your account every 2 months. Here's $2,000. We're looking at 10 pips per day. Every 2 months, you can see every 8 weeks, your account, your 2,000 is now close to 4. Now it's 8,400. Now it's 17,904. Another 8 weeks, it's 38,000. Another 8 weeks, it's 82,000. Obviously, the bigger your account, the bigger the growth. But less than a year, you can see 176,000. the end of the year, 258, starting with a $2,000 account. That's 10 pips per day. So now you realize why I'm willing to spend 10-15 minutes every night bringing up the volume profile daily charts and once a week doing all the weekly charts so you can see these value areas on your chart. The market oftentimes chops around inside the value area, and when it breaks above it, guess what? Everybody from yesterday, the majority of positions were inside this range. Anybody who was short, when it goes above here, there's going to be some stops get hit that's going to push it up. Let's look at some of the other ones. Dollar CAD. Here's the value area today. This is where the majority of, I think I already went over this one. You can see the market came down, found support, and went back up. Let's try the dollar Swiss. Look at how it acted as support right here. Acted as support once it broke down underneath there. And sometimes the point of control will be in the middle. Sometimes it'll be towards the top. Sometimes it'll be towards the bottom. That number is where the most activity of the entire day happens. It's a very key number. And that's why I want to color it yellow so it stands out. Even when you add other support resistance to your chart, these areas are going to be critical. And that's why I'm working with my partner to create special lines that will showcase a little bit of gray above and below the area to make it stand out more. When you add your other areas to your chart, for example, the daily pivots are very useful, mainly because everybody uses them. And we have the ability to showcase these on the left-hand side of the chart if you want. You see they're over here. Monthly pivots are very key. You might want to have that be 60% width of your chart. Weekly pivots, just be able to see where they're at. Put those on the right-hand side. Other support resistance that you might add to your normal chart would be the previous days, weeks, and months high and low. So you can see between the three, or between these major areas, when the price is above there, it acted as support here. It went up to the weekly pivot, found resistance, came down to the monthly pivot, which is also yesterday's low, and found support. When it did break down underneath there, it went to the previous week's low and found support. Exploded up and found resistance and some selling at the monthly pivot. And these are just other areas of support resistance that you can put on your chart. Let's end with the euro dollar here. You can see all the major areas. Previous week's highs acted as resistance. Previous monthly and also weekly pivot acted as support here. Previous day's low acted as resistance. These are all areas that you're going to trade off of. When it goes above the weekly pivot, it's likely to find resistance here. And these are also areas where you can use for profit targets and exiting trades, frequently at the maximum profit. If it goes through it, then you wait for the next level. If it goes through there, the next level, and so forth. So you would have got out of that trade somewhere up here at the monthly pivot. If you get a pullback, a lot of times resistance areas, once broken, act as support. You will see that frequently. If it doesn't act as support, then the trend's going to continue, basically reverse and go the opposite way. I showed this one earlier, and you can see how all these areas act as support resistance. If an area gets broken and then it acts as support, it's a very high probability place to buy and expect one of the next areas to act as the profit target. Now, when an area gets broken like this, the previous day's high is oftentimes a profit target, and you can see it's a tremendous number of pips away, 50 pips away from where the value area was. And when it broke through the low, the previous day's low was right there. It got you into a breakout to the downside about 10 pips early, and a breakout to the upside a full 60 pips early.